With home prices on the rise, many first-time homebuyers are searching for an affordable way to buy a new home. Foreclosures may provide just the perfect opportunity. When you buy a foreclosure, it is possible to buy a home under its market value.
Another pro is that you may experience less competition. Sometimes foreclosures are not listed on the big real estate sites. Sometimes you do have to do a little bit of digging. In that case, you may get to swoop up a foreclosure property and get it under contract before you're competing with tons of other buyers. Foreclosures can sometimes be difficult to finance. Now, if you have been considering residential mortgages, like a normal FHA loan, or let's say you're using a VA loan, those types of loans are going to have appraisers that need to see that your property meets certain health and safety standards. And sometimes these foreclosure properties can be pretty run down.
Okay, Nicole, I think the question everybody watching right now wants to know is, as a first-time home buyer who's interested in buying a foreclosed home, how can I get financing to make this purchase?
Great question. Not all loan types are going to allow you to buy a foreclosure. So here are 3 loan types that will allow you to purchase one of these homes.
The 203K loan is an FHA loan that's designed for home buyers to buy any kind of property and also finance the repairs for said property into a single mortgage.
This is huge.
Huge.
And make sure that you heard Kachi said any property. This is going to come into play when we talk about the next 2 loan types. There are 2 different types of 203K loans. There's a traditional 203K as well as a streamlined 203K. Both of these are pretty similar in how you get these loans, but the one that you actually end up going with will differ depending on how many improvements the home needs that you are under contract on. It's also important to know that not all lenders are going to handle the FHA 203K loan.
A big plus of this loan is that you do not need the upfront cash to make this repairs. This is huge for first-time home buyers who don't have a lot of cash on hand because you get to finance the repairs in the loan. A con of this loan is they charge a higher interest rate as well as a higher upfront fee. There's also a requirement that they have to approve the contractor that you use to make the repairs.
I've only heard in a few situations that people have been able to use these loans and do some of the work themselves. But just keep in mind that if you are going the 203K route, that your work or the work of the contractors you're using is going to be checked every single step of the way. So this has to be professionally done. It can't be something that's being DIY'd.
So no DIY. You also have to use this house as your primary residence, as they will not allow you to use this house for an investment property. So you can't use the FHA 203K to buy a house and flip it or rent it. They're not going to let you do that. Now, the big question is, what does it take in order to get pre-approved for this FHA 203K loan? Nicole, tell these people.
So if you want to put just 3.5% down, you have to have a minimum of a 580 credit score. If you have more down payment, it is worth noting, if you can put 10% down, FHA will start at a 500 credit score.
Wow.
So this is great for people who maybe have cash but lower credit scores as well. You would have to prove that you have steady income over the past 2 years and a pretty good debt to income ratio.
So now you guys know what's required to get this FHA 203K loan. Now let's move on to the next loan that's available to you if you want to buy a foreclosure property.
Yes, Kachi, this is the Fannie Mae HomePath, which allows home buyers to buy any HomePath home for a low down payment as well as up to a 3% credit on their closing costs. It's a huge bonus for people who are wanting to buy a foreclosure and potentially don't have a ton of cash for a down payment and to cover their own costs.
So what is the difference between this Fannie Mae HomePath and the FHA 203K loan?
So the big thing here is that the 203K loan will allow you to buy any property and finance in those improvements. It can be a foreclosure listed anywhere. It could even be a pre-foreclosure where the seller is behind on their payments, but the bank hasn't taken it over yet. It could also be a short sale, whereas this Fannie Mae HomePath is specifically for HomePath properties. So these are properties that are already owned by Fannie Mae, and they have a financing for home buyers to get in these homes to allow them to buy foreclosures, which is a good opportunity to kind of beat out some of the competition in this active market.
Wow, that's awesome. I'm sure you guys that are watching, you're probably wondering if this HomePath loan is only for properties owned by HomePath, right?
Yes.
Where can we find those homes? How do we know where they are?
Absolutely. You would just go onto the HomePath website. It's super easy to find. If you type into Google HomePath Homes, it'll be the first thing that pops up. You can search by city, by address, and it'll show you any of these eligible properties. Now, you can work with your normal realtor on these, and it's a very easy process to submit an offer. I've even shown 2 HomePath properties recently in Little Rock for my clients.
Now, some of the potential drawbacks of this HomePath loan is 1, the home that you buy has to be your primary residence, and you must occupy this home within 60 days immediately after you close. Another drawback of this HomePath loan is that you must take a first-time homebuyer course online.
Although you may not want to take this homebuyer course, this course online, first of all, 1, it's online.
Yeah.
Second of all, that course is what gives you access to having those 3% of your closing costs covered. So it is worth sitting on your computer and scrolling through a few slides and videos in order to save thousands of dollars.
What credit score is needed for me as a first-time home buyer to get this loan?
The minimum to get this loan type is a little bit higher. It is a 620 credit score. So if you are interested in purchasing a HomePath property, there are 2 loan types that you could use directly through Fannie Mae. The first one is the HomeReady Program, which is 3% down. So you could literally put less down than an FHA loan. It would be a 3% down, as well as potentially getting those closing costs covered. Now, the thing with the HomeReady program is that it does not finance in repairs or improvements. So it is just actually purchasing the property.
Wow, okay.
Now, the second option is called a HomeStyle Renovation mortgage. This is very similar to that HomeReady, but it allows you to also borrow money and finance into one loan the purchase of the home as well as those repairs. With this program, you can finance up to 65% of the as completed home in repairs. If you are an investor, or maybe you are wanting to buy your first home and then along the way decide it may be a good rental, we do have one other loan type here that might fit for you.
It is called the Freddie Mac Home Steps loan. Now, this loan allows home buyer to purchase a Freddie Mac REO-owned home through their private lenders.
We don't have any advertised requirements or eligibility for. It's more of a case-on-case basis, but the good thing here is that it can be for a primary residence and investors can use this as well.
Another huge advantage is with this loan, you don't have to pay any mortgage insurance.
That could definitely save hundreds to thousands of dollars a year.
Money saver.
The only downside to the Freddie Mac Home Steps is that it is only currently available in certain states, which are a little hard to remember, so we'll put them on the screen.
Yes. Isn't the Home Steps similar to the HomePath, to where you can only buy homes owned by HomeStep?
Yes. You've got it right. You can only buy these Freddie Mac owned properties.
How do my beautiful people find homes owned by HomeStep?
Just like before, you would go onto the Freddie Mac website. You could search for any area under the sun and they will pull up all of the available homes.
Sounds good to me.
So the moral of the story is you do not have to have over $100,000 in cash or need to go stand on the courthouse front steps to go to an auction in order to buy a foreclosure. There are plenty of low down payment ways that you as a home buyer can get into one of these homes.
With the end of the eviction moratorium fast approaching, we might see an increase in foreclosure homes being listed in the coming months. So knowing that these options are available to you to purchase foreclosure homes and get properties potentially under market value is huge. So I need you to do us a favor and share this video on social media so that they too can know that these options are available. Make sure to leave us a like and subscribe to the channel for more informational videos like this one. We will see you in the next video. Boom.